Thank you very much, ladies and gentlemen, and thanks for standing by and waiting for the, well, not quite tail end, Charlie, but we're getting towards the end. Scotgold Resources, unlike one of the earlier presentations, we're one of the companies that sound as if we've got something to do with Scotland, and we do actually have something to do with Scotland. We've got our little mine up in Tyndrum, and I was here in February talking about it for some of you who may have also seen that, and basically here back to give you an update. That's the standard disclaimer. I think we've got the same lawyers as Velarix. Just a quick snapshot. We are an Australian company by birth, but essentially we're operationally UK-based. We have a UK-based management team. We've got a site team up here in Scotland. All our financing is done here in the UK. We did have a historical legacy of a Australian listing on the ASX. We're in the process of voluntary delisting of that, and that will save us quite a bit in the way of corporate overheads and simplifying our structure. In addition, In addition, over the recent period, we've done quite a bit to simplify our balance sheet. We've moved. What we had was some options, convertible notes. Those have all now been redeemed, and we've left with a small 0.3 million unsecured loan to our major shareholder, Nat LaRue. So it's all putting things together for future growth. Over and above that, for things which are only of really very interest to accountants, we're busy restructuring and getting the correct corporate structure with vehicles in place to accept the Cononish asset into an SPV, and just generally tidying ourselves up corporately. The leadership team, just for those who don't know, Nat LaRue, very eminent person in the City of London, basically South African born but raised here in Scotland, educated in Edinburgh, and he's been the sort of the key behind the sort of rebirth of us since 2014, and he now owns 40% plus of the company. Myself, CEO, I'm basically a gold miner, came through the ranks in South Africa, West Africa, and now here in Scotland. Chris Sangster, who's also with us this evening, is another very experienced mining guy with a broad range of metals under his belt. David Swan, our CFO, he's an Australian. We don't hold that against him, just to show we do actually tolerate some Australians. But he's got a lot of experience in the mining industry, and obviously, you know, from a junior gold producer perspective, a lot happens in Australia, so that's very valuable experience. And we've got Nairi Hill, who's our project geologist. She's done an MSc on Cononish, so she knows the belt and the geology, I think, probably better than anybody who's probably on this planet, I dare say. Since 2014, when Nat came in and basically recapitalized the company, you know, our focus is primarily on getting Cononish into production, and we're planning to do that in 2017. And I will unreservedly sort of say the rest of the presentation this evening is focused on Cononish. But we do have a very exciting exploration project, both here in Scotland. We've picked up another license in Portugal, and we have some applications in France. What will happen with them, we're not quite sure at this point in time. But our strategy is to become a long-lived, profitable gold miner, and that means getting our core asset into production, using that revenue to build the longevity of it, and to look at then can we expand using the portfolio on the Grampian projects to expand production by bringing in Cononish 2, Cononish 3, Cononish 4. That's where we want to get to. Cononish itself, 100% owned gold project. It is fully permitted, and it's a relatively modest size, 250,000 ounces in resource and about 200,000 in reserve. And a bankable study was completed in August last year. Just a quick picture of where we are. We're sitting down here in Edinburgh. We're up here in Tyndrum is where the mine is. And this gives you a picture of our land holding, both here and over here at Ochils. This is by far the most significant holding on this Dalradian belt, which I'll come on to, but it's a geological belt which runs all the way from Scandinavia through Scotland into Northern Ireland and off into North America. And you may well have heard of Dalradian Resources and Galantis in Northern Ireland. They're all on the same geological belt. So they're talking about resources of sort of 3 or 4 million at Dalradian. We're in that same territory, and there's no reason why they couldn't find similar scale deposits here as well. Just zooming into where we are, this is looking up the Cononish Valley, just to the west of Tyndrum. You've got the black line here, so represents the ore body. It's a little bit similar to what Morris described. Our vein is a subvertical vein between 2 and 4 meters wide, very white quartz, very visible, easy to mine, good ground conditions. And as I say, it runs through the hill. We've then got where the M of mine is. We then have a tunnel goes in the side of the hill, and the mine will basically be mining up 160 meters into the hillside and down 80 meters below the tunnel. We then have a spoil heap on surface, which is what we are processing at the moment, and I'll come on to that in a minute. And we then have the historical farm down the bottom here, and a little farmhouse where I stay when I'm up there. This is what the edits to the tunnel look like. So it was developed using traditional handheld methods. The mine itself, when we develop it for proper, will be use trackless mining, mechanized methodology, which is the way to go in these sorts of ore bodies. This just gives you a quick overview of where we've got to with the resources and reserves. This is where the tunnel comes in. The red indicates the most confidence, so that's a measured. And you've got indicated, which is what we're effectively going to aim for on the mine plan. And then you've got the yellow, which is inferred. But all this ground is open. So as was described earlier, these things come up from the bottom. So there's no reason why these chutes don't extend downwards. And compared with underground mines, we are extremely shallow, and it would just be a case of it requires further drilling to expand that resource. This is a schematic of what the mine will look like when it's fully developed. And so you basically come in with this tunnel. This tunnel is one that already exists, but it will be enlarged. You then go up a spiral ramp, like a multi-story car park. You then come out on your various car park levels, and then you drill down from one level to the other. You blast the rock. It drops down a series of holes, all passes onto this level, and it comes out on trucks, out onto the surface, and then gets put through the processing plant. So salient features. We have got an 8-year mine life to mine the ore body at about 72,000 tonnes a month. As was also described earlier, one thing about underground mining is it's the points of access you've got that controls your mining rate. Because we are one single ore body, we are limited to the number of access points we will ever have. So the sort of 72,000 tonnes per annum we feel is a comfortable rate for this mine. And even if we were to drill out more at depth, we would be unlikely to radically expand the production rate from the mine itself. What we could do is more likely is we're going to find other prospects, other ore bodies running in parallel to that in the hills nearby, and set up separate mines, which will then add, as I said, another Cononish style production unit. 8 years. The reason we sort of got to 8 years, that's simply what we've drilled off last, and just from an economics perspective, one tends to find when one gets to the sort of 8 to 10 year mark for a mine life, so it starts becoming less. There's less incentive to invest and drill for more because of the discounted cash flow and what that's worth to you in 10 years' time. You're better off getting this into production, using the money you've got, and then you'll then expand that and continue extending longevity as the life of the mine goes on. We're very high grade as gold mines go, 11.8 gold equivalent. By gold equivalent, we mean that's a combination of gold and silver. The silver contributes about 0.7 to that. The gold represents about 11.1. Very good recoveries. It's very simple metallurgy, 93%, and we'll come on to that again in a minute. And a production rate of about averaging 24,000 ounces a year. But because of the resource work we've done, we've been able to identify where the higher grade zones are, which means we can schedule our mining so that we get to the higher grade zones first, and get pre-production of over 28,000 in the first couple of years, which obviously helps your cash flow in those early years when you're repaying your capital. So what does the project look like? So capital cost 24 million. That's life of mine, so that includes your replacement fleet after 4 years, that sort of thing. And it requires about 18.5 million funding up front to get to a cash positive position. Life of mine operating costs, extremely low by gold mining standards, $523 per ounce and £327. What you also need to look at is the fact that, as an underground mine, you do have far more flexibility than with an open pit mine to actually high grade. So if certain stopes, if the gold price dropped, you can actually go to the areas where the higher grade are and mine those and get your grade up to bring your costs down. That's something with an open pit mine you can't do, because you basically have to mine it from the top down, and you take your ice cream cone. You can't mine the bottom of the ice cream first. With underground mining, you can be far more selective. So our ability to weather any storms in the gold price are pretty well as good as it gets. In terms of what is the project return, it's about 67 million EBITDA, NPV of 23 million. This was when the project was done last August, and that was at a gold price of $1,100 an ounce and an exchange rate of 1.6 US dollars to the pound. So that gave you an equivalent pound price of 687 pounds per ounce. So what has actually happened in the meantime is, if one looks at the pound price of gold, this is the level that the study was done at, which sort of seemed conservative when we were back here. It then went up significantly, with the gold price went up in dollars, and then we had Brexit and it's gone up even higher. So unless you believe that the pound is going to strengthen substantially going forward, we're sitting with quite a good Brexit hedge here. Gold seems pretty stable at around about the £1,000 an ounce mark. And what impact does that have on our economics? Well, effectively, where we were sitting over here, EBITDA of 67, which I just told you, it's now up to 120 million. So you've doubled your EBITDA just with that change in the gold price. But anyway, we got to this point with these figures of August last year, and then we spent the back end of last year looking for how we're going to finance this and put it together. And with the market as it was, we were unable to identify sources of finance that made sense for our existing shareholders. I mean, if you're prepared to pay any price, you can raise money. But if you're going to do it what's a sensible price and preserves value for the existing shareholders, was a different challenge. And we found that it was difficult, and we kept getting told we're a bit small. Well, we can't do anything about that. The story's been around for a long time. Is it real? You talk about a premium for Scottish gold. Is that real? Is this all just a pipe dream? So we said to ourselves, well, okay, how do we address all these concerns? And we came up with the concept of putting in a small pilot plant to process some of the stockpile that we have on surface. So the objectives of this pilot plant, and this is what we call the bulk processing trial, was to provide, first of all, to de-risk the project even further. It's all a case of, cost of money depends on the perceived risk. So doing a pilot scale plant de-risks the project. It will determine that we can actually produce gold with this proven Scottish provenance, and we can market that to jewellery trade, and we can demonstrate there is a premium to be had. And I think the most important thing from what's going to turn out to be the most important thing is we're looking at now a phased approach. If we can make this work, rather than having to just go from 0 to 100 miles an hour, spend our 18 million and build the whole mine in one go, can we build this thing incrementally? Can we start with a smaller mine, with a small phased approach for a couple of years with much lower capex, and then ramp it up, and then use internally generated cash flow to progress the mine and build it to the 100 miles an hour, or 72,000 tonnes per annum, I should more accurately say. So this is just for any techies or engineers amongst you. This is just a schematic of what it does. Basically, we take the stockpile that was sitting on surface, which is the material when they dug the tunnel. We bring it in, put it in a pile, put it on a conveyor. It goes through a hammer mill, which basically bangs it down. It then goes up and it comes down a spiral, which is like a water tube. It then goes over a shaking table, and we then collect the gold and the concentrates off this table. These are just some pictures of what it actually looks like now in practice. So that's the feed hopper, comes up the conveyor, goes through the hammer mill. From the hammer mill, it goes up, comes down these spirals. The effect of the spirals is that the heavy material stays right near the center, and the light stuff gets washed to the outside. So when it gets to the bottom, you can put a knife in there and you can separate the light from the heavies. So it's all purely gravity, no chemicals involved. That concentrate from those spirals then comes down and goes onto this table. And what our two guys here are looking at is effectively this picture here. So you've got the material being fed at the back, it's traveling in this direction, but as it's traveling in this direction, there's a slope on the table that way. So all the lighter stuff tends to fall off and the heavier stuff stays. So you've got a ribbon of gold there. You've then got a ribbon of galena, which is lead sulfide, which also has gold associated with it. And then you've got the pyrite here, is iron sulfide, which also has a lot of gold associated with it. So we can then separate off these streams. What we're doing is we separate off the galena and the gold and the pure gold from the pyrite and the gold. And then we take this stream and we put it back over again over exactly the same process. And then we go along with a little thing like a dentist suction thing that he puts in your mouth to suck up everything. And we basically suck up that gold stream. When we've sucked it up, we put it in the furnace, which is a bit like a big microwave, heat it up to 1100 degrees C, and then out pops a little thing which looks something like that. So that's about 10 ounces of gold, which will be sucked off the table, put into a furnace, and smelted. So that's about 10 grams worth, sitting there at 1,000 pounds an ounce. So that's where we got to. Just to sort of reiterate, I think, and we're very proud of what we've done. It's on an incredibly small scale. We understand that, but it demonstrates proof of concept. It demonstrates that we've got the ability to do it, to work with the authorities. Essentially, we announced this in February here, right in this very venue, back in February this year. We then had to order the thing. We had to put our applications into the planners to do this. We had to get it to site. We had to get it installed. We had to get it commissioned. Within 6 months, we were pouring our first gold. September the 12th, we started our two-shift operations, and here we are giving you the update and showing you the benefit of our toils. I think there are some sort of technical results here, which don't mean much to unless you are a techie. And I think we're putting them out there to show people that the thing is actually working, but actually these are not the prime focus of the whole project. The prime focus of the processing of this bulk processing trial was to show proof of concept and to actually demonstrate, get some gold, which we can then market, and to give us the confidence with the technology, and in particular the tailings disposal. So we've done, out of the 2,400 tonnes that we've got on stockpile, we've treated about 800, about a third so far. The average feed grade is 8 grams a tonne, which is pretty well what we expected. We've now produced about 10 tonnes of concentrate, of the pyrite concentrate, which is lower grade stuff, which gives us equivalent to about 64 ounces. The galena, that's that grey stuff, and the gold, we've got about 200 kilograms of that, obviously a lot less, but it's at a much, much higher grade, about 9,000 grams a tonne. And then we've got the gold doré that we're producing. So overall, out of the 8 grams that went in, we've recovered about 62%. The balance has gone into tails, which is in bags, which we can then retreat when we get the full plant and we actually develop the mine proper. So we're not talking, whilst this number would be probably unacceptably low if that was our final production figure. This is not a production setup. It's a processing trial. The positives we've taken out of this trial are significant. First of all, it's shown that with very, very simple and crude technology, the final plant we're talking about a 3.5 to 4 million pound asset to build the final plant. This plant cost us £140,000. So, it's not the final plant. But even with this coarse grind and this simple technology, we can very effectively separate those sulfides from the gangue minerals. And you saw that, you can see it with your own eyes on the table. The fact that we can also physically separate the galena, which is something we hadn't appreciated before. And that's a significant because galena is potentially toxic if you're trying to dispose of the tails. So the fact we can separate galena off into a separate concentrate means that that potentially could become a saleable product in its own right, over and above the gold, and it may avoid some costs in terms of tailings disposal. We got the high grades and a lower concentrate. That's to do with the mass ball. And then we're talking about the, we were concerned about how much we would actually produce. And the thing is, to sell this to the jewellery trade, you need to have a meaningful quantity. And we determined that to be approximately 100 ounces. And that's because if a jeweller's going to buy something from you, he doesn't want to make one ring and that sells like, goes off the shelf on the first day, and he comes back for more and he says, well, actually, you have to come back next week. So we actually want to get ourselves a decent stockpile. We're building inventory, and then that will all be refined, and we'll have a big marketing campaign and determine what the premium is going to be. And perhaps most importantly is the tailing storage facility. Because if we're going to achieve this concept of building the thing incrementally and going for a small level first, and then building up with internally generated cash flow and building up, we have to be able to build our tailings dam, which is a major capital item, also staged with that rising profile. The original design called for about a £5 million investment to build a dam, and that was for a life of mine, and that came pretty well up front. The way we're doing this trial with these tailings bags has demonstrated that there is actually an alternative way of building this dam, and we're now doing the work to say, well, actually, if we wanted to use the same technology but on the bigger scale for the full mine, how could we do it? And if we can, as we believe now we can, then it means we can go back to the planning authorities and say, actually, we don't want to build this whole thing up front. We want to build it incrementally as we build up, and that is what is going to make the huge improvement to the economics of the whole project. So the next slide is just basically we're continuing, whilst we 62% is a low number in terms of a normal production mine. It's good for us, but we can still improve it. We're still learning all the time. We find adding more water improves the hammer mill performance, etc., etc. So we think we're going to still get better. And also, the story about the Scottish gold. I think it's been raised. Over and above the fact that we can get a premium for it, we have an agreement in place that we're going to set up what we call marketing co. So the long term, we are miners. I'm a miner. I'm not a jeweler. I'm not a promoter. And so we wanted to sort of separate those entities and as well give a stake to the local communities and the various institutions. So the concept is that we will have a marketing company which the mine can then sell the mine to, and the marketing company has the right to buy at 10% over spot. So the mine is guaranteed at 10%, at least 10% premium. Over and above, the mine owns 40% of Market Co. So we then get 40% of what's over and above that. But Market Co itself would then look at how the whole jewellery is marketed. But it will take an investment in Market Co. So before we can do that investment in Market Co and what the marketing is required, this whole trial is giving us the baseline as to what interest is out there, finding out who the players are, the Hamilton Inches, the Sheila Fleets of this world, what might they want to take, what is the size of the market. So all of that is rolling into, when we get into full production, a long-term supply to the Scottish jewellery industry, and you'll see Scottish gold being sold for wedding rings and whatever for the long-term future, I hope. The possible phased approach, I think we're sort of running over time now, but essentially that's what I've described. Instead of going from 0 to 100 in one, let's just go through in different gears, go from sort of like do a three gear strut up, gear 1 and gear 2. Oops. To make that happen, what we've got to do is the metallurgical work to say, well, all these lessons we've learned about how effective gravity can be. Our original plant was actually a flotation plant. Maybe we actually don't need to do flotation. Maybe we can do it by purely gravity methods, which has environmental and cost impacts, positive cost impacts for us. And maybe we don't need to grind it so fine. Maybe we can do with a coarser grind. So all those are positives that we can bring out of this. The mining is essentially looking at, well, if we're going to do this thing as go through the different gears, can we how do we do that? How do we schedule that? That's fairly mechanistic. But the tailing storage is the big one, and we've got like Peacehold very world-renowned consulting engineers, now working on the viability of building a staged tailings disposal system, which instead of having a big capex up front, effectively almost becomes an operating cost, and you build it pay as you go for your storage facility, which will have a tremendous impact on the project economics. So essentially, whilst we're pursuing this staged approach, nothing stops us at any point in time saying, actually, let's just go for it. You know, gold price is going through the roof and everybody wants it, but it's really a case of, we think this stage approach offers the best chance of us getting the right finance and preserving the value for the existing shareholders. And we will pursue that, but if another opportunity came along to accelerate it, we can accelerate it at any time. As I say, and I think that's basically the BPT helps us with both.
Your time is up.
My time is up. Right, okay. Thank you very much. Then it's basically, that's our expiration, but I alluded to that. How do I turn it off?
So, time only for one question, but maybe two quick questions. If anyone's got any questions? Gentleman there.
Can you clarify the permit? Is that for 9 months, or is that for the mine, or is that for the spoil?
The permit, we have a permit for the bulk processing trial, which was for 9 months. Essentially, it was a 6 month. We said it was going to be 6 months at 400 a month to get 2,400 tonnes, but we allowed ourselves 9 months because there's going to be ramp-ups and whatever else. There's no real reason why that can't be extended. We will be in discussions with the parks over that. But from a parks perspective, they wanted a small, finite plan which they could then approve and then could see how it works before they just gave us an open check and carte blanche to carry on willy-nilly.
Question at the very back.
What do you expect the premium to be on Scottish Gold?
It's very hard to say, but you know, we have had indicative offers already as a minimum of 20%. So people have come to us and said they'll take everything we can take and give us 20% for it. So we don't yet know. Obviously, it depends. It's a little bit dependent on volume. So there's going to be, it depends on how much you want, and it depends on that volume that's required. Is going to take a marketing strategy to generate that demand.
Thanks very much. Thank you, Richard.
Right.